Hello again, everyone. It's Vince Forer from TradingWinds.com, and this is our update for September 7th, 2020. Hope everyone's having a great long weekend so far. Let's take a quick look at how things finished off on Friday. We did see more selling, although we did see a pretty sizable late-day rally. On the Dow, by the end of the session, the Dow was down just under 160 points. The important thing, though, is that we did close right back at that 20. Lots of volume over Thursday and Friday, though, and the futures have opened higher so far, but it's way too early to even look at these. We'll see how they do later this evening and into tomorrow morning. But again, the late day rally was a positive, but overall pretty strong selling over the last couple of days. The S&P 500 finished lower by 28 points on Friday, while the Nasdaq was down 145 points, and the Russell giving back a little over 9 points. TLT, and we'll come back to this chart in a moment, but bonds were lower, significantly lower on Friday, almost 2% lower, as was pretty much everything. Crude oil down as well, about 70 cents or 1.8%, while gold finishing lower, actually gaining 2 points, I should say, gaining 2 points on Friday afternoon, up just 0.1%. The US dollar also bouncing here on Friday as well. If we take a broader look here, let's bring up the main ETFs for the different sectors. So Xle for the energy sector, under pressure here and at risk of giving up this previous low from early January here. If it does so, most likely we will see a retest of the March low. So that's something to definitely keep an eye on this week. Xlf the Financials, again closing in the red here, but hanging on to that 20, so far remaining above that upsloping 20. Technology sector, again, this sector includes the group of stocks that have really driven this market. So this says it all here, as we had that strong rally followed by the strong 2-day pullback, although Friday, again, a pretty sizable rally late in the day. Xlp Consumer Staples also bouncing off that 20. So a lot of these, we may see a setup here early this week to the long side once again. Or, if the low of Friday gets taken out on many of these charts, then we'll probably see some pretty substantial selling. Utilities here, hanging on to the cloud here, but not much in the way of momentum. It's been stuck in a range here since early June. If you look at that June high and the late June low here, it's really been stuck in that range since then. Healthcare sell-off last couple of days. Been some, there is some support here, which it held so far. There's also support near the 100 level, so that one seems pretty safe for now. XLY Consumer Discretionaries, again, looks just like the S&P, really. Late day rally is the only positive you can take away from Friday. Real estate sector holding on, but stuck in a range. Industrials, so far so good, holding on. There is support there. We may see a setup here early this week. Materials, also this looks like just a blip on the radar, right? Just a 2-day pullback into support. Look for a potential setup there. Oh boy, there's that error message again. I apologize. I will absolutely try once again to fix that. Let's push through here. XLC communication sector, holding on to the 20-period moving average here, but again, substantial selling over the last couple of days. XRT here as well, the retail sector selling off, late day rally, but this one did close below this support level and below that 20-period moving average. So we'll have to keep a closer eye on that. Also from the currency world here. FXA, there's 3 ETFs, FXA, FXB, and FXC. Those are the Australian dollar, the British pound, the Canadian dollar. All look like they're setting up to the long side here. So keep an eye on that early this week. Now, if we turn to news coming up this week, obviously today being Monday, markets are closed due to the Labor Day weekend or holiday, Tuesday, we get the consumer credit report. Wednesday, we get MBA mortgage apps, along with the Red Book report, the JOLTS job report as well. Thursday, we get jobless claims, we get core PPI and wholesale trade, along with crude oil inventories. And Friday, we get core CPI here, along with the U.S. Baker Hughes rig count. Now, before I let you go, let me see if I can get rid of this now. No, not quite yet. Okay. Well, let's try to, and I apologize. And there we go. Okay. All right. Let's carry on here. I got a few charts to share with you. TGH to the long side, the setup. Again, one of the reasons why this caught my eye is because, during a day when most things sold off hard, this one moved higher, and not only that, it looks like it's about to break above these recent highs here. If we look at the weekly chart, we're turning a corner. It's nowhere near the all-time highs, but we took out a number of highs here, and you can see the 20 upsloping, crossing through that cloud. And if we look at the monthly chart, we have potential triple bottom here. Now, this won't be confirmed for a while, but again, not only did we break above the 20, we took out a recent high here. So it looks like there could be room for a move higher on the break of this high. So keep an eye on that. DAR is another one that was a nice breakout to the highs on Friday with significant slope on the 20, a double dip formation on the RSI. Pretty strong looking setup considering the day it was on Friday. And if you look at the weekly, it certainly confirms the move. So does the monthly. Extended, but no sell-off compared to everything else. So obviously there's something going on there. On the short side, that TLT chart I showed you, yes, still in the cloud here, but barely. Significant momentum to the downside, consistently seeing lower highs and lower lows here. And there's that cross of the 50 line on the RSI. So this looks like we could get a move into the 155 area here in short order. The other one is SWX here. Not quite back to the 20, but bounce off that 50 line. And it looks like it really wants to retest those March lows. If we look at the weekly chart, that's pretty bearish. Look at the monthly, and we just broke that cloud on the monthly. So there is some support here near 55, but beyond that, it gets pretty weak. So again, overall, if we look at the Dow, the S&P, or the NASDAQ, we had some pretty strong selling last couple of days. We did have that bounce on Friday, which was a glimmer of hope. And, remember, these are odd times. We know the Fed is out there buying. So we may just see another long setup here for all of these index charts and another leg higher very soon here. But if Friday's low is taken out, then we may be in for a bigger retracement than we initially thought. So we'll keep an eye on that as we head into the open tomorrow. And of course, a reminder that our next live market chat will be on Wednesday at 10 a.m. Eastern. I hope to see you there. Please enjoy the rest of your weekend, and we will see you on our next update. Take care.